Joining us now, very pleased to say, is Katie Stockton, founder and managing partner at Fairlead Strategies and portfolio manager for TAC. Thank you so much for joining us this morning, Katie. What's your technical setup for the S&P 500 as we head into Q4, given the uncharacteristically strong September that we saw?
Yeah, indeed, it's been a very, very strong uptrend, and it still has the support of the rising 20-day moving average. That's been our primary trend following metric, and it isn't always the case. We often use things like the MACD indicator, but there's been so much noise on the way up and really no meaningful pullback. So we want to just smooth out that trend, and the 20-day is a great way to do that. So as long as that's the case, we want to stay on the right side of this uptrend, and yet we definitely have some signs of upside exhaustion. These are not even just short-term, but intermediate term, to suggest that the S&P 500 might be prone to several weeks of corrective action. And with that in mind, we are looking out for a loss of momentum. And we've been in the mode of recommending to our clients that they hold their existing exposure, names that have upheld also that rising 20-day, but maybe hold off on new positions until there is some kind of consolidation phase.
Okay, are you expecting that to happen over the course of perhaps October? And then, what would that mean as far as a catalyst for some more of a broadening out in this market, do you think?
It would certainly be healthy, I would imagine, and regenerate new buying interest. Of course, it's a very steep up move, especially in certain segments of the market like AI. So it's a tough environment in which to feel comfortable necessarily adding exposure into strength. That has been the right thing to do. It's often the right thing to do. But at this stage, we do have enough indications from things like the DeMark indicators and our stochastics to suggest that that consolidation could last a few weeks. Q4, as you allude to, does have very positive seasonal influences, and there is still upside to a price objective that we could arrive at from the June breakout by the S&P 500. That was just shy of 6,900. So there still is a compelling case, of course, to stay again on the right side of that trend.
Jim Bianco out with a note suggesting that the AI boom bubble now has the S&P 500 and the NASDAQ 100 with the same 8 largest stocks. And no surprises what those names are. I'm just wondering, with a lot of talk about concentration risk out there, how you and your team are thinking about that right now.
Well, concentration risk is a real thing. I think people are pretty heavy in these segments of the market, maybe in some cases without even knowing it. So it is a risk out there, because when we do see pullbacks, it's those same stocks, the technology stocks in particular, that tend to exhibit leadership on the downside. So those that have been beneficial to portfolios, the higher beta names that have rallied, are the same ones that can detract from performance. So our recommendation has been to make sure there's some diversification in your core holdings. ETFs like ours, which is TAC, TACK, can serve to do that and help you sort of mitigate the risk of the concentrated exposure of the S&P 500 and of the NASDAQ 100.
Okay, and obviously a lot of attention on gold, seeing that we have continued to see these records. I'm just wondering what your technical outlook is for the precious metal as well as the dollar.
Well, we've been very bullish on the price of gold. There's no reason not to. The uptrend still has positive momentum across time frames. Like the S&P 500, there are some signs of exhaustion, but none of which are confirmed by a loss of momentum. So that's what we'll be watching. We don't have a way of assigning a new upside objective. Our objectives have already been cleared, and yet we just want to keep the trends on our side. And we're very comfortable having that kind of diversification in a portfolio, whether it's gold or other precious metals, of which they're similarly in nice uptrends. For the dollar, there's an interesting short-term breakout potentially underway. We watch something called the cloud model, and it's essentially in line. So if we see some firmness here in the very near term from the dollar index, it would mark a minor breakout to suggest that it can rally to about 100. Still within the context of a cyclical downtrend, but it does have a shift underway from a momentum perspective.
Okay, a rally to 100. Interesting. And obviously that's coming off the back of euro and yen weakness. Just sort of switching gears to sort of international as people look to diversify their portfolios beyond these borders. Japanese stocks having a pretty good run. I'm just wondering, how you're looking at that market.
Well, Japan has really exhibited very positive momentum, and we saw a gap up in the last few days that suggests that there is very strong interest in Japanese equities. When you do see those gaps up after prolonged up moves, however, they can be exhaustive, giving way to consolidation. So, like in the US, we wouldn't necessarily chase this up move, but we do see it as a bullish long term development. And even among European equities, we're seeing quite a few breakouts that have at least bullish intermediate term implications. So, the action overseas is quite good from a technical perspective, and we're definitely seeing some rotation, perhaps that favors international markets over the U.S. for the next few months. So it's a little early to be confident in that, but we are seeing the ratios improve to some degree.
Yeah, I mean, we've certainly seen outperformances in places like Europe, China, EM, etc. So certainly one to keep an eye on. Katie Stockton, always a pleasure. Thank you so much for joining us here at Schwab Network. That is Katie Stockton, founder and managing partner, Fairlead Strategies and portfolio manager for TAC.